Welcome to the deep dive, where we cut through all the noise and bring you the information you need to make smart investment decisions.
That's right.
Today we're doing a deep dive on Intuit.
Yeah.
It's INTU, if you're looking on the stock market.
Right.
A company that you probably know for TurboTax and QuickBooks.
Absolutely.
And we're going to be examining if INTU deserves a place in your portfolio.
Should you buy it or should you sell it?
Yeah.
Big questions.
The big question.
Figure that out.
We'll try to help you figure that out at least.
Absolutely.
We're drawing from several sources today, including Intuit's Wikipedia page and financial analysis from Zacks.
Great sources.
Yeah, to provide a well-rounded perspective,
Sure.
all sides of the story.
Yeah, so Intuit's been around for a while, since
Yeah.
1983.
Oh, wow.
Founded by Scott Cook and Tom Prulix.
Okay.
And what's interesting is that their journey began with Quicken,
Okay.
which was a personal finance software coded in a bedroom back in the day.
Wow.
Yeah, they faced competition from a dozen rivals back then.
Oh, wow.
And even faced a potential acquisition by Microsoft in the 90s.
Oh, wow. So they were big even back then.
Yeah, it speaks volumes about their early significance, for sure.
So it seems like they've consistently been on the radar of major players.
Yeah, absolutely.
Even back then in the 90s, Microsoft wanted to buy them.
Yep.
So looking at some of their financials from Zacks,
Okay.
for fiscal year 2024, they reported $16.29 billion in revenue
Wow.
and a net income of $2.96 billion.
Huge.
Pretty big, yeah.
Massive.
What can we kind of infer from these numbers?
Well, these figures indicate a strong financial standing.
Okay.
The consistent revenue growth, along with substantial net income, points towards profitability.
Yeah.
But the question is this growth sustainable?
Nice.
To understand that, we need to delve deeper into their market position.
Okay.
And how they generate revenue.
Okay, well, speaking of market share, Intuit basically owns the personal tax software market with TurboTax.
They're the big dog.
Yeah.
For sure.
And they hold a dominant position in small business accounting with QuickBooks.
Huge.
And their global user base for these products is just enormous.
Absolutely.
But they've also expanded beyond those core offerings.
They have, so they're no longer reliant on just one-time software sales.
Oh.
They've strategically shifted toward a subscription-based model,
Okay.
offering services like QuickBooks Commerce, QuickBooks Payroll, and ProConnect for tax professionals.
Oh, so that's interesting.
Right.
They're moving more towards a recurring revenue model.
Right, and this move towards recurring revenue may provide more stability and predictability for the company.
Okay, so this shift to a subscription model raises an interesting point for me.
Yeah.
Does that inherently make the company less risky, or is it more nuanced than that?
It's definitely more nuanced.
Okay.
While recurring revenue can provide stability, it also depends on Intuit's ability to retain those subscribers.
Okay.
Factors like competition, pricing changes, and evolving customer needs can all impact subscriber churn.
Okay.
Additionally, the success of this model hinges on their capacity to innovate
Rough.
and continuously add value to their subscription offerings.
So are they innovating?
Yeah. That's the question.
Yeah.
It seems like they've embraced the shift to online and mobile products.
Yeah.
What else have they been doing to stay ahead of the curve?
Yeah, because it seems like that's kind of table stakes now.
It is.
You have to have a good website. You have to have a good app.
Absolutely.
Um,
So they've made significant investments in their innovation pipeline, including some major acquisitions.
okay.
Their purchase of Credit Karma
Okay.
for credit monitoring back in 2020
Uh-huh.
for $7.1 billion,
Wow.
and MailChimp, an email marketing platform,
Okay.
for $12 billion in 2021.
Wow, that's a lot of money.
Huge acquisition.
So these acquisitions really indicate a strategic push to expand beyond their core tax and accounting software.
They are, yes.
But are these acquisitions paying off?
It remains to be seen.
Wow.
That's a crucial question for any investor to consider.
Right.
While these acquisitions hold the potential to unlock new revenue streams and create a comprehensive financial ecosystem for individuals and businesses,
Okay.
they also come with risks.
What kind of risks are we talking about here?
Well, integration is certainly a factor.
Okay.
Successfully merging the acquired company's technologies, cultures, and operations into its existing structure is critical.
Right.
Additionally, the acquisitions need to deliver on their promised value proposition.
Okay.
Are they attracting new customers?
Right.
Are they generating the expected revenue growth?
Yeah.
These are all factors investors need to consider.
So while acquisitions can be a powerful growth strategy,
For sure.
they're not without their pitfalls.
Absolutely.
So this kind of brings us to the critical question of valuation.
Okay.
From Zacks, we see Intuit's price to earnings ratio, price to sales ratio,
Yeah.
and price to cash flow ratio.
All the important ones.
Yeah. How should we interpret these metrics to determine if Intuit is overvalued, undervalued, or fairly priced?
So these valuation ratios provide a snapshot of how the market is valuing Intuit compared to its earnings, sales, and cash flow.
Okay.
However, we need to consider them in context.
Okay.
How do these ratios compare to Intuit's historical performance and to its industry peers?
Okay.
Are their growth prospects and profitability in line with their current valuation?
Right. So it's all relative.
It is.
Yeah. Okay.
It's not just the number, it's what it means.
Yeah. You have to compare it to other things.
Exactly.
All right. So we're going to take a quick break, and then we'll be right back after this to continue our deep dive into Intuit.
Sounds good. It sounds like determining Intuit's true value requires a pretty careful analysis of both their financial performance and their future prospects.
Yeah, for sure.
Like looking at their recent acquisitions again.
Okay.
Was acquiring Credit Karma and MailChimp the right move?
Right.
Or did they overpay for growth?
Yeah. Did they just like blow a bunch of money?
Yeah, that's a complex question.
Okay.
On the surface, both companies seem to align with Intuit's strategy of expanding their offerings and creating a more comprehensive financial ecosystem.
Okay. So like they seem to fit in with like the big picture.
They do, yeah.
Okay.
However, the long-term success of these acquisitions depends on several factors.
Okay. Such as
Well, consider Credit Karma.
Bro.
While it provides Intuit with a foothold in the credit monitoring market, it's a crowded space
Right.
with established players.
Right.
The key is whether they can effectively leverage Credit Karma's data and user base to cross-sell their other products and services.
Okay.
Essentially turning those users into Intuit customers.
So it's all about like getting people into that Intuit ecosystem
That's right.
and then upselling them or cross-selling.
Exactly.
Okay. And what about MailChimp?
Well, MailChimp presents a different set of opportunities and challenges.
Oh.
It caters to small businesses,
Uh-huh.
which aligns well with Intuit's QuickBooks customer base.
Yeah.
The potential lies in integrating MailChimp's marketing capabilities with Intuit's financial tools,
Yeah.
allowing small businesses to manage both aspects from a single platform.
Right. So they can do their accounting and their marketing all on one platform.
Exactly.
Okay.
However, successfully integrating these two distinct platforms without alienating either customer base will be crucial.
Yeah. It's hard to merge those two.
It is,
You know,
for sure.
two very different types of things.
Very different.
So it seems like the jury's still out on whether these acquisitions will ultimately be considered successful.
Yeah, only time will tell.
Yeah. So let's shift gears and talk about the pros and cons of owning Intuit stock.
Okay.
What are the key arguments for and against investing in this company?
So on the positive side,
Okay.
Intuit boasts a strong market position
Uh-huh.
in both personal and small business finance.
Right. They're kind of like the 800-pound gorilla in the room.
They are, yeah.
Yeah.
Their brand recognition is high.
Yeah. Everybody knows TurboTax.
Everybody knows QuickBooks. And their products, particularly TurboTax and QuickBooks, are considered industry standards.
Uh-huh.
They have a history of innovation
Okay.
and have successfully adapted to the shift toward online and mobile platforms.
Yeah, and that's key, like we were talking about before.
It is.
They've got to have that.
Absolutely.
So that's a compelling argument.
Yep.
But what about the potential downsides?
Okay, well, despite their strengths,
Yeah.
Intuit does face some challenges.
Okay.
Their reliance on tax season creates a cyclical element to their revenue,
Uh-huh.
with a significant portion of their earnings concentrated in the first half of the year.
Okay, so they make most of their money in like January through April.
Pretty much, yeah.
Okay.
They are also subject to regulatory scrutiny,
Okay.
as evidenced by the FTC lawsuit regarding their free filing options.
Right. There's always something going on with taxes.
Always.
It's like a political football.
It is, that's
Um,
for sure.
So those are valid concerns.
Yep.
What about competition?
Okay, so competition is always a factor in the technology industry.
Okay.
While Intuit holds a dominant position, emerging players and free alternatives constantly try to disrupt the market.
Right.
Intuit's ability to maintain its competitive edge through ongoing innovation and strategic acquisitions will be crucial for continued success.
So they've got to stay ahead of the curve.
They do.
Yeah.
Completely.
Sounds like investors need to weigh these risks against the potential rewards before making a decision.
For sure.
Speaking of rewards, what is Intuit's current dividend policy and share buyback program? And what do those signal about the company's financial strategy?
So Intuit does pay a dividend,
Okay.
albeit a modest one,
Okay.
which indicates a willingness to return value to shareholders.
Uh,
They also have a history of share buybacks, which can
yes.
boost earnings per share
Okay.
and signal confidence in the company's future prospects.
So those actions kind of suggest a commitment to shareholder value.
Yeah.
But what about their long-term vision? Does Intuit demonstrate a commitment to broader social and environmental goals?
All right, so
In other words, how do they fare in terms of ESG factors?
Intuit has made efforts to integrate ESG principles into their operations.
Okay.
They have set ambitious goals for reducing their environmental impact,
Ah.
promoting diversity and inclusion within their workforce,
Okay.
and supporting local communities through various initiatives.
Okay, so they seem to be checking all the boxes
They do.
for ESG.
For sure.
Uh.
Investors who prioritize ESG factors will likely find Intuit's commitment to these principles appealing.
Okay, this brings us back to our crucial question.
Right.
Is Intuit the right fit for your portfolio?
Ultimately, that decision depends on your individual investment goals,
Uh-huh.
risk tolerance,
Okay.
and investment horizon.
Right.
Intuit is a well-established company
Right.
with a strong track record.
Uh.
But like any investment, it comes with its own set of risks and rewards.
So there's no one-size-fits-all answer?
All right. Exactly. Thorough research, careful analysis,
No?
and an understanding of your own investment objectives are essential for making informed investment decisions.
Okay, so before we wrap up our deep dive into Intuit,
Okay.
I want to remind our listeners to check out our YouTube channel
Good idea.
for more in-depth analysis of companies like this.
Absolutely.
We're always looking for new companies to explore.
Yes,
So be sure to leave your suggestions in the comment section below. We love hearing from you.
we do.
So back to Intuit. We've examined their history, their financials, their growth strategies,
All of it.
potential risks, and even their broader economic and social impact.
Pretty comprehensive.
Yeah, what can we conclude about their long-term prospects?
Well, Intuit's future hinges on their ability to navigate a rapidly changing landscape.
Okay.
Yeah, the rise of cloud computing, the increasing demand for mobile-first solutions, and the emergence of disruptive technologies all present both challenges and opportunities.
It sounds like they can't rest on their laurels.
They need to constantly innovate to stay ahead of the curve.
Right, absolutely.
Their recent acquisitions of Credit Karma and MailChimp suggest they're at least aware of this need to evolve.
Right.
But it remains to be seen how effectively they can integrate these companies
Right.
and leverage their strengths to create a truly comprehensive financial ecosystem.
Integration is key.
Yeah.
Intuit needs to seamlessly blend these acquisitions into their existing product portfolio
Uh-huh.
without disrupting their core business.
Right.
They also need to demonstrate that these acquisitions can contribute to sustainable revenue growth and profitability,
Okay.
justifying the significant investments they've made.
Right, because they spent a lot of money.
Yeah, billions of dollars.
Yeah, so it seems like Intuit's future success hinges on balancing innovation with execution.
It does.
They need to be bold in their pursuit of new opportunities while also being disciplined in their approach to integration and financial management.
It's a delicate balance.
Yeah. Investors should closely monitor Intuit's progress on both fronts to assess their long-term potential.
Okay.
Are they successfully integrating their acquisitions?
Right.
Are they developing innovative new products and services?
Hmm.
Are they maintaining strong financial performance?
Yeah.
The answers to these questions will provide valuable insights into Intuit's future trajectory.
So for investors considering Intuit, it's not just about their current performance, but their ability to adapt and thrive in a constantly evolving market.
Right. It's about understanding their strategy, their execution, and their ability to create long-term value.
That's a really good point.
Investing in any company requires a thorough understanding of their business, their industry, and their future prospects. And Intuit, with its strong market position, ambitious growth strategy, and commitment to innovation, presents a compelling case for investors seeking exposure to the financial technology sector.
That's an insightful perspective.
Thank you.
We've covered a lot of ground in our deep dive into Intuit.
We have.
We've explored their history, financials, growth strategies,
Mhm.
potential risks, and commitment to ESG principles.
Very thorough.
Hopefully this analysis has provided you with some valuable insights to make your investment decisions.
Absolutely. Knowledge is power.
Yes.
The more you understand about the companies you invest in, the better equipped you are to make sound financial decisions.
And before we sign off, be sure to check out our YouTube channel for other in-depth analysis of companies just like Intuit.
Yeah, we have a ton of great content over there.
We're always looking for new companies to explore, so leave your suggestions in the comment section.
Yes, please.
We'd love to hear from you.
We would.
Until next time, keep learning, keep exploring, and keep diving deep.
Thanks for listening, everybody.